Hi, I'm Ed McWilliams, tax partner at Cerini and Associates, here to discuss the 2025 and beyond tax reform outlook. As of today, January 2025, most of the provisions of the 2017 Tax Cut and Jobs Act are scheduled to expire at December 31st, 2025. These will include the lower top marginal rate, the 199A qualified business income deduction, the higher standard deduction, the higher estate tax exemption, the state and local tax cap, the interest deduction limitation, and the net operating loss limitation. The new administration has an aligned executive and legislative branch, which has set the table for 2025 tax law changes. According to experts who are familiar with Republican thinking, extending the TCJA is a top priority in the short term, with a broader tax reform package coming later. However, there is a narrow House of Representatives majority, which may prove difficult to have any changes. Currently, the House of Representatives has 218 to 215 Republican versus Democrat. Therefore, with such a narrow majority, it may be that only a few people can defect to pass things through, which may limit the bill. We saw this in 2020 when there was a Democratic aligned executive and legislative branch, and they were unable to push through most of their desired tax reform because of one or two members. Therefore, it is not a given that anything will actually happen in 2025, but is something we need to pay very close attention to. The recently enacted hiring freeze on the federal government will impact the IRS's ability to hire the promised 88,000 employees, which were allotted as part of the Inflation Reduction Act passed in late 2022. Currently, there are campaign promises, proposed legislation, and early events that have made several various calls for certain things, such as an elimination on tax on Social Security and tips, an outright elimination of the income tax and replacement with a national sales tax, shifting IRS resources that were hired as part of the Inflation Reduction Act to other areas of the government, and corporate tax reductions. Currently, these represent mostly executive branch statements, which are not binding by law, as legally speaking, Congress is the one who sets tax law and policy for the country. Typically, they will work to enact the executive branch's desired goals, but this cannot be done by executive order or other means. Therefore, in order for any of these changes to have effect, they must be taken under Congress and through broader reform, not just by statement. As we move forward in 2025, we will continue to monitor the situation and provide updates. Thank you very much. We look forward to working through this unique situation with everybody as time goes on.